Stock market is up one day and down the next. You need experienced advice from a pro.
Hi, I'm Phil Grande of philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information. And whoa!
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
And good afternoon, and welcome to my podcast. Hi, I'm Phil Grande, philsgang.com. Okay, so today we're starting to listen to this noise.
If you look at the strength of the economy, we've got GDP now growing at about 4%, and the strength of the fiscal situation in the U.S. Joe, do you realize that if you extrapolate what we've done this year, that the deficit this year is going to drop by $600 billion relative to last year? That $600 billion drop explains why 10-year treasuries are going down, not a weak economy.
Lie, 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 lie. Lie, 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 lie.
Bonds are going down because there's such bad news. The reason is because we are caught in a liquidity trap. And you're caught in a liquidity trap because this dope who runs the Federal Reserve, Powell, doesn't know what he's doing. The Federal Reserve, I don't care. Anytime you go and look at the Federal Reserve, they do nothing well. They never done anything well. They make things worse. They're always behind the eight ball. But they have put us in a liquidity trap with this continuous increase in money supply. That's all they know how to do to keep the stock market going up. I mean, it's amazing. It's amazing to say the economy. Here, this is Hassett, okay? Here's another one he's saying. This is such BS.
Yeah, one of the things that happens at the White House, and you have to be careful the way you speak about it, is that if you call up a CEO and say, how's it going, including banks, credit card companies, and so on, then they'll give you an honest read. And basically, I think throughout, everybody thinks that the momentum of the third quarter is continuing. There's nothing that's moving in the opposite direction. And so, yeah, I think that we're very solidly confident that the momentum that you see at the second...
Yeah, where's the momentum? Who's getting all this money? Who's making money? Who's doing well? It's the very top 1 percentile. They're the ones that made all the money since 2008 with all this increased money supply to increase the stock market. I mean, the stock market, for God's sakes, is up, 1,200%? I got some numbers. I'll catch up to them later. But this is insane what he says. So in other words, what is a liquidity trap, okay? First of all, when you have all this increased money supply and you got people out there consuming, now we have a record 100 trillion, okay, in total debt. Now, think about it. That's what's that, about 324% of our GDP? How about the national debt at 38 trillion? That's 123% of our GDP. What's this guy talk about? He's a liar. Corporate debt, record high, 21 trillion. That's 69% of our GDP. Household debt is insane. 20 trillion, 67% of our GDP. A liquidity trap is when you keep increasing the money supply to keep on, getting rates down, to keep on pushing money into these companies, CEOs, to keep on doing stock buybacks. And what happens is, as people get poorer and poorer and more in debt, I mean, come on. I mean, look, the consumer has had it. Household debt, 18 trillion. That's historic. Mortgage debt, historic. Credit card debt, 1.2 trillion. Historic. We never had credit debt like this. Auto debt, 1.6 trillion. We never had such low savings, 2.3% in savings. A liquidity trap occurs when the government makes all this easy money. And what's the purpose of this money? What's the purpose of increasing the money supply? It's to funnel money to the banks. So the banks will then funnel that money to CEOs for stock buybacks. So to mask it, you have consumers out there, of course, who are going to go out and buy. And then they're up to their neck in debt. But what do? They keep increasing the money supply, knowing they're going to get further in debt. That's called the liquidity trap. So when you have individuals, you have business, small business, up to their neck, and you keep these low rates by increasing the money supply, that's how you do it, and they keep consuming, they get in worse shape, worse debt. Then you get economic uncertainty. That's what we have, especially when you have a terrible, weak labor market, which we have. We have terrible, weak job openings. Never so bad. Job openings are terrible. So people start holding on to their cash. Eventually, because of the weak labor market, people are fearful they're going to lose their job. The minute they see their neighbor not going to work in the morning, that really puts panic in them. They stop consuming. And that's when our economy starts going to hell in a handbasket very, very fast. And that's where we are right now. Now, the stock market's going to keep rallying due to increased money supply. But let me show you something. Everybody keeps saying, well, when is the market going to crash? The only way the market's going to crash, because they've increased this money supply to a science, where they're screwing the average guy. The guy who's making $65,000 and his wife's working, he's working $65,000 to $75,000, they're screwed. They're in deep trouble. So let's take a look at this Warren Buffett indicator. Reaches an all-time high. What's that mean? If you take the total value of all publicly traded stocks to GDP ratio, it's insane. It's never been this high. Example, if you take in 2000, when we had the dot-com crash, when we had stocks to GDP at 150%, the GDP ratio, 150%, we had a crash. In 2007, look at the ratio, stocks to GDP ratio, 100%. We crashed. It's double that today, but the market keeps making new highs. How can that be? Because they're going to keep increasing the money supply. And who's got all the money? Where's the wealth? The wealth's at the very top. You take the top 1% owns 25 trillion of the 47 trillion. Notice all the wealth, all the aggregate wealth in stocks, put them all together, 47 trillion. 47 trillion. And never before did we have the stock market, did we have real estate rather, equal the stock market. They're both at 47 trillion. But let's take the wealth. It's with few people. The top 1% owns 25 trillion of the 47 trillion. The top 10% owns 93%. 93%, or 43 trillion of the 47 trillion. Think about that for a moment. The top 10% own 93%, or 43 trillion of the total 47 trillion value of all our stocks as an aggregate. This is insane. Insane. So, what's going to happen is this. When you look at this chart, Buffett chart. If we had a crash, the dot-com crash, because of the stock to GDP ratio was at 150%, and we had in 2007 a crash, again, stocks to GDP ratio 100%, we're at 200%. So what does this mean? It means that they're going to keep increasing the money supply, and we're going to stay in this liquidity trap until it blows up. So don't be afraid. Don't go out and start dumping your stocks thinking the market's going to go down. Not as long as you have Powell, who is owned by Wall Street and is controlled by the top, not the 1%, the 1/100th of 1%. They run everything. And who explains that the best but George Carlin?
You have owners. They own you. They own everything. They own all the important land. They own and control the corporations. They've long since bought and paid for the Senate, the Congress, the state houses, the city halls. They got the judges in their back pockets. And they own all the big media companies, so they control just about all of the news and information you get to hear.
And look at the news and information we do get, especially from when you listen to these financial people on Fox or on CNBC or any of these networks. They lie to you because they want you to feel good. Now, Powell, we all know, is a dope. What he doesn't understand, or if he does, he should be tried as a criminal, increased money supply doesn't always translate into increased spending. That's why they do it, so that you will go out and increase spending. What it does do, and guarantees, an increase in inflation. Look what those dopes did under Biden. They printed so much money, increased the money supply, so inflation hit 9%. Inflation hit 9%. So what people are trying to do now, he can cut rates all he wants. It's not going to help. People are cutting back on spending to pay down their debt, like their credit cards. They're fearful. This is going to make things worse. But don't start selling off your stocks, because Powell, either he doesn't understand, as I said, that increased money supply doesn't always translate into increased spending, but it does guarantee inflation. He's going to keep just doing the same thing. Now, when he's replaced, President Trump's going to make sure he's going to put his own guy in there. And I don't blame him. Now, remember what Trump did in his first round. He convinced people that, boy, as long as the stock market's going up, you're doing well. You're doing well. No. And the economy's doing well. No. And I love Trump. I vote for Trump. I know him personally. The top 1% does well. The top 10%, who owns 93% or 43 trillion of 47 trillion stock wealth, they're doing well. But Trump, again, I said yesterday, his approval rating is starting to tank. August, 42% to now 35%, and 68% of Americans are looking at the economy as negative. This is bad. Because, see, this was all, ever since Biden started office, and when he got into office, it's always been about pushing the stock market. Japan is a great example. They got into a liquidity trap, and they never got out of it. That occurred in the 1990s. And they did the same thing we're doing now. They keep prolonging these zero or low rates. And people feel good. And they keep going spending to a point they're so in debt that they have nowhere to go except file bankruptcy. And the first time we saw our first liquidity trap was like the same time we saw Japan. Japan was in the 90s, but we started ours in 2008 when the Fed cut rates to zero. Stocks soared. Growth didn't soar. That's what people don't understand. And in Trump's first term, every other day he'd come out with something that would move the stock market up. And he said, well, look at the stock market. I'm going to take credit for it. Because people were convinced the stock market reflects how well the economy is doing. Powell never understood. The economy doesn't always, respond positive with increased money supply. So under Powell, when you keep increasing money supply, you keep decreasing the value of your dollar. The reason why 68% of Americans feels the economy negative because when they go to Walmart, when they go to Target, when they go to Lowe's, what do they find? Increased prices, because the dollar's so weak now. When we import all this stuff to fill the shelves at Walmart and Target and Lowe's, it's expensive because the dollar is worthless. Powell never understood that. I don't think he does. I don't. He may be a professor, or he's got master degrees, but doesn't mean you're smart. People are already in such financial trouble.
30 seconds.
I mean, you got to be kidding me. Household debt, credit card debt, they're dying. Now, today, the top 10% doing fine. 10% is doing fine. They're terrific. They're so wealthy. I mean, think about it. They own 43 trillion, or 93% of the 47 trillion total stock value. Wouldn't you like to own 93% of the total stock value of 47 trillion?
9, 8,
So
7.
we are nearing the highest probability of a correction or crash, but don't start selling your stock just yet. Talk about it when we get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back. Hi, I'm Phil Grande, philsgang.com. Okay? We've been teaching folks just like you since 1998 how to trade the market, invest in the market properly. I mean, it's amazing to me what's going on here. This guy, Hassert, who's part of the administration, he's the, I guess, economic, he's like the, let's equate it to, like he's the United States Chamber of Commerce. He's supposed to come out and make everybody feel good. Listen to this lie right here. What a lie this is. Unbelievable.
I mean, right now, if you look at GDP now for the third quarter, it's like a little bit under 4%, and the consumption contribution for ordinary folks, how much their consumption is going up because they feel optimistic and have money in their pockets, is like 2.3.
Wait a minute. How do they have money in their pocket when they have historic household debt? When bankruptcies for folks have increased 25% since a year ago. Increased 25%. Businesses have increased bankruptcy 40%. I don't get this guy. How is that? How are they doing well? How are they doing well when there's a housing affordability gap where the average house is $462,000? $462,000. That's an average house, low-end house. That's your starter home. You need a salary of $125,000 to buy that home because you need $3,600 a month to meet the mortgage payments. Put on another 20% for taxes and everything. Nobody can buy these things. What's he talking about? And here's another one.
You know, the Google searches for AI bubble. You're not concerned about that just yet.
No, so we're not calling this a bubble again, especially on a valuation perspective.
Yeah, they didn't call. Yeah, and they didn't call the .com a bubble either, and they didn't call the housing financial crash before it happened a bubble. So if you take a look again, all the wealth is in few hands. All of it, and we are now nearing, if you look at this chart again, when you take the value, the total value of our stocks to GDPs at 200%. When we crashed during the dot-com days, it was 150%. When we crashed in 2008, 2007, 2008, that was the financial crash, housing, it was at 100%. So we're double that. We're double that. So why aren't we crashing? Because they're going to keep increasing the money supply. And when they keep increasing the money supply, and how do they do that? How do they actually do that? Increasing money supply is simple. They go to the banks and they buy T-notes, treasuries. They buy their assets. And now the bank's got cash to lend. And they tell us it's a good thing because now they can start lending to everybody. But where's the majority of that cash go? To CEOs of publicly traded companies that do stock buybacks that keep increasing stock prices without having to have earnings or profits. That's right. Now, let's think about this. Since 2018, the increased money supply, was $7 trillion or 57% increase. Okay, or let's go back to today. Okay. So since 2000 to today, 2025, the increased money supply is up 340%. You want to know how your stocks are going up? Or by 17 trillion. That's from 6 trillion to 22 trillion. Since 2018, increased money supply by Powell is up 7 trillion or 57% increase. What are you, nuts? Yet, it's hard to believe, here we are, from 2000 to 2025, due to increased money supply, the stock values have increased 1,640%. That's how much your S&P's gone up. Are you nuts? From 2008 to 2025, the S&P has gained 730%. Nasdaq's gained 2,000%. The only way they could do that is stock buybacks. What's even harder to believe is when the 2.3 trillion stock value to GDP was 150%, the S&P crashed 50%. Nasdaq crashed 78%, 2000. When the stock value in 2008 was at 14 trillion to GDP of 100%, the S&P crashed again. 50%, NASDAQ 50%. Yet today, why are we going to be so lucky to believe that in 2025, when GDP to stock market ratio is off the rails, twice what it was in 2008, what caused it to crash, yet no crash. Instead, almost every day we're making new highs. So yes, we're at a point where this is the highest probability of a crash taking place. But don't start selling your stocks right now because they can keep this market going higher as long as they keep increasing the money supply. Stock buybacks. That's what it's all about. Now, one day, on the flip side, the Fed's going to take this money back out. Now, remember how I told you they increased the money supply? Okay? So, now, the Fed goes in and buys from the banks all these different securities. T-bills, notes, treasuries, whatever. Now they got cash. They can go loan, but they don't loan to the folks. Sure, they do some loaning. I'm not saying they don't. Of course they do. But the majority of that money goes to stock buybacks. So one day, they're going to turn around, and there's a flip side to this. When that ratio, when the total value of all publicly traded stocks to GDP ratio keeps going up out of hand, the big money, the top 1% and the 1/100th of 1%, the super wealthy, are going to pull the plug. And they're going to make a fortune shorting the market on the way down. But they're not at that point now. But there's going to be a flip side where they got to pull the money out of the system or inflation is going to go up to 20%. So the flip side is they start taking the treasury bills, the notes, the treasury, all these assets, all these securities. And what do? They're going to turn around and sell them. They'll sell them to the banks. They'll sell them to the 5 biggest banks. And then all of a sudden, there's no more liquidity going in. Stock buyback starts slowing down. And where does the crash begin? Margin debt. Because as soon as that happens and the stocks start going down, they get their margin call, the tourist investor, they panic, sell everything I have, and that's when your crash starts. But don't get ready now. Because I think Powell's going to continue this. And I know Trump will. That's why Trump's trying to put somebody else and getting rid of him so they can keep this thing going like when his first term. Because all Trump thinks about is the stock market. I know him, okay? I know him. I was in his, I think it was the first or second book. He honored me by putting me in. But my point is that I know him well enough how he thinks. And all he does think about is if I can keep the stock market going up, everybody's going to love me. Everybody's going to think the economy's doing great. But not when all the money is going to, if the market's worth 47 trillion, all the stocks as an aggregate is worth 47 trillion, and the top 1% owns 26 trillion of 47 trillion. But let's put the 1% back in. Let's take the top 10%. If they own 93% of the 43 trillion, okay, or 43 trillion of the 47 trillion, top 10%, that's it. A tiny, tiny, tiny sliver. How does that help the economy? It doesn't. And nobody cares it's going to help the economy. You think people are sitting in Washington, these I don't want to use a bad name, but these politicians, you think they care? Do you think Wall Street, the guys on Wall Street? People on Wall Street are not nice people. They're very vicious. They're amoral. I mean, all they think about is money. They don't think anything else, and they'll screw anyway. I was on that street. I know how they think. It's an amoral breed. The only way you could stay there, I couldn't stay there. So Powell and his Fed did a terrible thing by keep increasing this money supply so aggressively, just to help out the 1/100th of 1% and the top 10%. And don't confuse the top 1% with the 1/100th of 1%. They're the real wealth. Like I played for you George Carlin's tape. They make all the decisions about our country. They are enormously wealthy. Now, the disparity between the 1% and the very wealthy, the 1/100, 1%, no one has any idea. It's significant. It's significant. And after Powell, remember what happened after COVID? Powell made a huge mistake. He lowered rates to 0. Wait a minute. Why did they do that? During COVID, nobody had to work. Everybody was getting checks. Checks were pouring in. People were sitting by their mailboxes with lounges, and they're pulling this is a fact, they're pulling their couches out of their houses, sitting next to the mailbox, waiting for another check. They paid their rent. They paid their car payment. They paid their rent payment. They paid everything for them. Remember the checks? One check after another. Everything was subsidized. You didn't have to pay your college loan. You had a moratorium on your house mortgage, moratorium on your rent, moratorium on everything. People were making so much money, then why the hell did they have to bring rates to 0 when it was over? That was stupid. Because it's for the purpose of increasing the stock buybacks. That's all we work. That's all we work on. And this inflation, they lie to us. Our inflation is double digits. There's no question about it. So the bottom line is this.
3 minutes.
When you're looking at stocks, make sure you're staying with stocks. And we teach this every day. You've got to follow the money. And the money is going where? Where's most of the money going? They're going into semiconductors. That's where most of the money goes, because that's the AI. AI, remember, consists of chip providers. And the biggest ones are NVIDIA, AMD, and Intel. That's where all the big money's going. But guess what's happening also? Big money goes into the cloud providers, Microsoft, Google, and Amazon. But those 6 stocks, the cloud providers, the chip providers, the cloud providers, and don't forget the smaller ones, IBM and Oracle, and don't forget the 2 big infrastructure support for the chip providers. So you got right there, you got about 12 stocks. 12 stocks. That's the whole deal right there. That's it. That's where all the money's going. And they're dumping stocks left and right, the institutions. But as I told you over and over, they keep increasing the money supply. So also that Wall Street can keep funding the margin accounts. So every time the big boys are dumping and going to the tourists, hey, buy mine. Here, you can have mine. Here, take my NVIDIA. Here, take my Microsoft. And they come in and buy because they borrow. They borrow. That is going to crack. And that's when the market starts to crack. But this market can keep going up for quite a long time as long as they keep doing increased money supply. But that's where the money is. I just went through those stocks. There's about 10 stocks there. You're wasting your time on everything else. That's where all the money's going. And certain semiconductors, okay? You're better off. We've done with our students. We got them into the ETF for semiconductors, SMH. And we got them in that. Most of them we got in on May 2nd or 3rd. And the market at that time was, I think we got them in somewhere around about 204, I think it was, 204, 205. Today it's 345. So what's that, Willie? 205 to say, let's see, where we?
70%.
Yeah, that's a 70% increase. Now we take in profits all along, and when we got in around, let's use that number, let's say $212, we took a lot of profits when it reached around August, okay, this August, and it was around $297 going to $300. Everybody take a lot of profits. 40%. So that at a 40% gain, we started to take a lot of profits. And then we got back in on the breakout. We'll show you how to do that. Just join my gang. We've been doing this since 1998. But this is a real problem, what's going on with increased money supply. It's going to kill us. See you on the charts.
Or call the office, 877-600-4264. That's 877-600-4264.